Hello and welcome to another video. I'm just going to keep this one nice and short, but just wanted to have a look really over the price action for last week, a bit of a recap really. I was expecting a weekly swing low to form within this region here. I was actually mentioned on one of my previous videos, but the reason being is we've actually got this monthly order block here. Okay, so there's the upper boundary, the lower boundary, and then in the middle, nice and easy, you've got the mean threshold. So there we are on the monthly. Go down to the weekly time frame. You can see how the weekly's given us that 1, 2, 3 swing, and we've had that bullish engulfing candle. If you look at the daily, you can see the accuracy of it here, where we've just tapped into it only 2 times into the mean threshold, and then we've actually come up higher. So we've taken the liquidity here. We've also got this daily bearish order block. But for myself, if you go down to the weekly time frame, it makes it nice and easy. We've got this previous low here on the weekly, and so US Tech is Nasdaq. It's just a different symbol, so it actually shows more the data. It's not actually a futures contract symbol. It is an equities index. So we've got this swing low here on the weekly time frame. So now we're looking for areas of influence to the upside where this bullish momentum is going to continue. Obviously, into the start of tomorrow, so that'll be Monday the 30th. We could probably expect some selling pressure at the beginning of the week, maybe Monday to Tuesday, just to give us the low of the week, just like this here. So ICT power of 3 concept on the weekly time frame. So from here, maybe a little bit of gap in, a bit of a sell-off, maybe run some short side liquidity, pair up some smart money buy orders with that, and then we'll be coming up. So on the Nasdaq, it's going to be, first objective is going to be around, we could probably even have a look at, so you've got the 1300 round figure here, which is another area to be considering. But we've got this low here, but then beyond that, we've actually got this weekly fair value gap here. So this is the upper, this is the lower part of the boundary, and then you've got your mean threshold in the middle. And then above there, we've also got this area here. And maybe sort of this little bit of a gap in here. So we've got this fair value gap here as well, but I think if we're going to come all the way up here, then we're not going to leave these equal highs here, so I've not actually mapped that one on. So first objective to the upside on the Nasdaq is 12,960, I would say, nice institutional level, and then we've got these relative equal highs in line with this weekly fair value gap here, so expect these to be taken, and that around the 13,600 level. So if we have a look at the US 500, so the S&P 500, same thing here. But what I'm favouring into the start of the week is we've actually got some, I would say, objective potential support here. So we've already closed above the weekly old low here, as you can see. So where we've actually got the potential for a bit of a sell-off in Monday into Tuesday, that is actually potentially going to bring us down to this, and this could act as some support. And then the next objective is going to be around the 4,300 level. So for myself personally, I'm going to be looking at the S&P to begin with, and then as we then look to trade above this, then we've got far more objective to the upside. But if you're looking just in terms of how the market moves, we've got a leg down, a retracement, a leg down. The retracement was due because of how much selling pressure that we've got, and also we've got this wickiness. So you can see there, we've actually failed to close below 3 week ago's low. Probably not the best English, guys, but you get what I mean. And then if we were to have a look on the monthly time frame on S&P, we've actually got this candle here. So I mean, you can probably, it's probably actually a rejection block, which has given us that reaction here. But you can see, I mean, of this this weekly low, we've actually, for the last 3 months, we've been able to close below there. So I think we're actually going to end the month here, maybe another sort of spike down, because that's just how the markets like to behave. And then maybe we have the potential for some buying pressure. What I've also been looking at as well, so I mean, if you look at where the average is, so the trajectory, so when we had this crash here, we've taken the lows here, this would have been in 2019 into 2020, 2020. We've basically been, because of the financial intervention of the Fed, basically what that's done is it's actually provided stimulus to the market, and when you've got a weak dollar, that actually favors strength in the indices, particularly obviously like the S&P 500, for example, because when it comes down to trade, that's just how it works. So and it's import, export, and things like that, which I'm not an expert on. I know enough to get by, so I won't actually go into it now and pretend that I'm an expert there. So yeah, so I mean, I was looking with just how overbought we are here, and the trajectory of this is just absolutely straight up. I have been dollar cost averaging from about here, and it was a great run, but it's just not sustainable. So I mean, we're now starting to get some signs of this sell-off coming to an end, especially because it's hit the news as well. If it's in the news, then I would say just do or think the opposite. So all the doom and gloom now about we're entering into a bear market and things like that, whilst they might not be wrong technically, everybody's then now going to be acting out of fear, and they'll be selling, and during those times we need to be doing what the opposite of the collective consciousness is doing, and buying up basically here. But I personally think that this was a great area for a buy. So if you look at since 2009, the angle of the incline, I would say that this area here is on par to consider taking this higher. And then if we also we don't actually have the data on this because of the symbol that I'm using, but it's very similar to that. So go back to the S&P 500. When you look on the daily time frame, you can see here, so we've actually broken this high. So we've actually got a shift in market structure here. We've got a short-term high that's broken to the upside. We've actually created a fair value gap here. So where we're looking on the S&P 500, we've got this old low, but we could also come back to fill in this imbalance here. For me, it would be a great opportunity to be looking for longs on the micro time frames, so 15-minute liquidity runs and below. And if we were simply just trading this as a swing trade, we'd be looking at coming in to fill this fair value gap, taking an entry just on there, and a stop loss either on candle 1, or you could even come down to this swing low here. So that would give us an objective of about 1.5 risk to reward. And if we were trading on the micro time frames, you look at it more easily like a 5-to-1. So what does that look like here? So you can see here, this has given us a good run up, and if we were to come back down into this fair value gap here, I'd be looking for a buy program basically to occur. So I'll be going through the different time frames and looking for an entry sort of late Monday into Tuesday, maybe Wednesday. But with the momentum that we've actually seen coming into the market here, if I just hide all this, the likelihood of it just completely turning around here now without some form of follow through I would say is unlikely, but that's not to say that it wouldn't happen. So we just need to make sure that we are remaining nimble. And with the fair value gap, we've also on the S&P on a daily time frame. So your weekly fair value gap is also coupled with all of these relative equal highs. There's going to be a lot of buy side liquidity pulled here. So we'd be looking at just taking profits around there. So 85% I think would be easily achievable for a longer term swing, but obviously if you're looking at taking that on a much smaller setup, then I would be confident to have a super tight stop, and you're probably looking realistically about 15% reward to your risk there if you can get a nice tight entry at the bottom of a daily low if it comes back to rebalance this. But I am going to be bullish on both of these indices into next week, and that's it really. I just wanted to share just a bit of an insight of what I was looking at, and then also with this area here, although we are encouraged not to pick a bottom in the market, you can still anticipate where the market may turn. So if you're looking on the weekly time frame and you've got this big run down, we've got all of this selling pressure, you can see that as we're taking the liquidity here, where we're getting big wick candles like this into fair value gaps, and where you've got like rejection blocks or any other of the, I think Michael calls them IBDA, PD arrays in price action basically. So these are area of influences really, to keep it nice and simple. And then so to support the bullish idea, so we've actually got the upper boundary of this fair value gap on US dollar. So DXY is a collective basket. It's about it's mostly weighted around euro, so it's the strength or weakness against. The majority of it is the euro, but then you've got other things in there like Swiss and yen and things like that. British pound as well, in varying degrees. So going into this, this is actually the monthly candle. So if we have a look at what this looks like here, so we are almost at the bottom of this fair value gap here. So we've come back in to fill that imbalance. Is there any more? So from here to here maybe, but then we've also got this bullish order block, so we could be coming back in. So I've definitely got some room to the downside. We've actually taken the liquidity above these highs as well, and so we're currently in a retracement on the dollar in terms of strength. Anyway, I hope this has been insightful to you, and be sure to leave your opinions and your comments down below. Literally, I've only got a few followers, so it won't take me long to get to answering any questions. But anyway, thanks for watching, and until I speak to you next week, take care.